So there's money, big money, pouring into the fact that somebody's betting big that by December, okay, gold is going to be north of $10,000, $15,000, or $20,000. We're talking about tens of millions of dollars worth invested by people that think that's going to happen. This is big money, and I expect it's smart money. And the other thing I'm watching, too, is there's a lot of talk about July the 4th and this gold-backed bond. You know, I heard your interview with Andy yesterday, Andy Scheckman, and he was saying, well, you know, it's Judy Shelton brought this up, but it's a possibility. It's being discussed, da-da-da-da-da. All the things that we're seeing up to this point, including this big engineered smashdown that we're witness to, the culmination of hopefully today, is all part and parcel of hopefully a great reset in the price of the precious metals. And when that happens, it'll be a great reset and everything else as well.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 22nd through June 29th, 2026, while supplies last. First this week, 1 ounce gold Australian Kangaroos are just $99 over spot per ounce. Pre-1933 AU $20 gold St. Gaudens coins are just $75 over melt per coin. 1 ounce silver UK Britannia are just $3.99 over spot per ounce. And finally, kilo silver Nordic Mint bars are $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. I'm always privileged to have this distinguished returning guest, Ed Steer, who we were referred to by David Morgan and by Ted Butler, who's been a longtime associate of GATA, the Gold Antitrust Action Committee, and has been in this since the beginning. Ed, thank you for joining us here again on Liberty and Finance.
Thank you for having me on, Dunnigan.
What a remarkable day to be having this interview during one of the largest smashdowns in recorded history of the metals, and at a time when so many explanations can be made of how that makes no sense logically, but we'll unpack that with your help. And one of the things I wanted to kick this off with was a rather astonishing financial article that came out on CoinDesk. It was rebroadcast by Google Financial News on the markets this morning. The title of it is Gold and Silver and Bitcoin Tumble as the, quote, debasement trade unwinds. And they go on to say precious metals have fallen sharply as markets price in Fed rate hikes. And they go in, if you skip down a little bit, it talks about because of renewed inflation fears, the Fed is likely to price in 2 more rate hikes by March of 2027. So in the face of renewed inflation fears, they're using that as the rational reason why markets would be selling off precious metals. All of the explanations that are made with a straight face by the mainstream financial press defy logic. I understand the half-baked logic behind this, but could you help us understand why they would say that renewed inflation fears would cause an unwinding of the protective assets like precious metals?
Well, first of all, I'll state right up front that George Orwell is alive and well in 2026. I mean, this information out there you see is unbelievable. I mean, what did he say? He said black is white and war is peace and things like that. I mean, well, that's what we're seeing here. I mean, the war started and the metals got killed. I mean, but they all had an explanation for it. And if you believe that, well, I have a bridge for you. So all of this stuff you see out there in the mainstream media is pure BS. And they're just using whatever words they can come up with to describe what's going on, like inflationary fears. And, you know, if you're having inflation fears, then they figure the precious metals should go up. And they're saying interest rates are going to go up, and I don't think they are. But they have to have a story, and they make one up. It's as simple as that. So that's not the explanation for what's going on at all. So you can't believe all the garbage you read in the mainstream media about the precious metals.
Just out of sake of completeness, I know that we may get some comments if we don't at least say this. Okay, so let's grant that some people will say because of anticipated higher interest rate hikes, it's more likely that short-term U.S. Treasury bonds will yield higher returns, and therefore there would be a flight to interest-bearing assets from assets that do not bear interest, such as precious metals. Any corroboration, comments, or debunking of that rationale before we move on, so people understand we're not entirely ignorant of that?
Well, certainly. I mean, that's the old saw they dig out. But if you go back in the past, I think it was back in 2000 for anybody that's been around that long, I remember very well interest rates and gold and silver going up at the same time, or was it back in 19? I can't remember, but the correlation or lack thereof between what's going on in the currencies and what's going on in the precious metal space is such hokum. It's impossible to believe. I'm looking at the dollar index right now, and it chopped a bit higher until about 9:15 this morning in New York, and it's been on the slide ever since. And it's only up 19 basis points at the moment. So you want to tell me that an increase of 19 basis points in the dollar index has caused a major sell-off of 10% in the silver price, and I don't know how much it is in gold, 4 or 5%. That's all. Like I said, that's just another one of these tropes they drag out, where higher inflation and higher interest rates, and the sky is falling, and all these BS stories they come up with, and the dollar index and interest rates is just another one of these bugaboos they haul out and make you put the fear of God into people going into the precious metals. But what we're witness to today is just another example of the commercial traders in their wash, rinse, and spin cycle, trying to flush out as many long holders as they possibly can. We've seen this movie countless times over the last 25 years, and the one we've lived through since the highs of late January is just another one in the process. Although everyone must have been, including myself, that this is a really, really ugly one.
The other thing that you have spoken about recently was that we don't know what the true price of gold and silver is. Can you expand on that?
Well, no, they've been suppressed through all of recorded history. I mean, you take a look at the gold and silver coinage back in the 17 and 1800. Well, for gold and silver money through all of recorded history, but they've been at fixed rates. A $20 gold U.S. $20 gold piece was equivalent to a $20 bill. And now a $20 gold piece is something north of around $4,000. So, who knows what the price is? The prices have been suppressed in the COMEX futures market for the last 50 plus years. And the banks have tried, mostly unsuccessfully, up until, starting in about five years ago. All of a sudden we saw the price start to rise, and more than that, 25 years ago, it's gone from $500 an ounce up to $5,700, and after this engineered price decline is back around below $4,000. So, if the banks weren't in there as short sellers of last resort, prevent prices of silver and gold, platinum and palladium, and the other commodities from rising in the COMEX futures market, it's an absolute guarantee that the prices of them, plus a whole range of other commodities, would be far higher than they are today. But this Anglo-American price management scheme has been going on since I think it started in gold in 1975, and it's been running now for 50 plus years. And the world's a totally different place now than it was back in 1975. The rise of China, Russia, India, and of course the number of people on the planet has doubled and tripled and quadrupled since then. And the demand for all commodities has gone through the roof, and this price management scheme in the paper market is way past its best before use date. And when they finally do let the prices rise to reflect that, we'll find out what the true free market prices of everything are, including gold and silver.
You've talked to us in the past about a record low interest and low short position, and a alignment setup, a real setup for a bullish posture of the major traders, to the most bullish setup that you've seen or that we've seen throughout history. How has this last market movement that's led us to today affected that outlook that you're seeing in the setup of the market?
Well, I'll tell you, it was bullish. It's been wildly bullish since about the middle of April, when the commercial traders have managed to cover a lot of their short positions, which has been ongoing since for over a year now. This part of the rally we saw in gold and silver last year was caused by the commercial traders going in and covering short positions. And of course, ever since they took the prices down at the end of January, they've been repeating the process to the downside. And what we're seeing and we're witness to right now as we're recording this program, Dunnigan, is the final flush out where the commercial traders are tricking and spoofing and pulling bids and everything else to get the traders on the long side to sell their long positions or go short, so the commercial traders can cover their short positions. And as wildly bullish as it was even on Monday, okay, just 3 days ago, it is even more wildly bullish now. We get a COT report on Friday and a bank participation report on the 10th of July. But I can tell you right now that the commercial short position held by the banks, mostly U.S. and British banks, it was the lowest on record five or so weeks ago, and it's even lower than that now. And I wouldn't be at all surprised that once we see the numbers that the U.S. bullion banks may actually be out of their short position in silver, but it's too soon to tell. But the numbers have never been more bullish than they are right now. And if Ted were still with us today, he would certainly concur. But from a COMEX futures market perspective, as ugly and as depressing as the price action is today, it just makes the setup for the rally that will follow even more stronger. And like I said, like you pointed out, is the numbers right now are the most bullish since I've been following the markets for 25 years.
You also have written recently and spoken recently about the historic shift from financial assets into real assets has begun, and it's unstoppable. Would you like to expand on that?
Well, sure. I mean, all you have to do is look at the price of gold. I mean, take a look at it's gone from, I remember when it was like $250 an ounce, and I thought that was expensive. And $1,000 was never attainable. And I was buying silver at my local bullion store for $5 an ounce. And so I said, I'm not going to spend $250 for an ounce of gold when I can buy silver for $5. So, the amount of money that's going into the physical market, just all you have to do is look at what the banks have been doing for the last 5 or 6 years. They've been net buyers of gold now for, 1,000 tons a year. And there's no question in my mind that they aren't big buyers. In the last 3 or 4 months with the price going down like that. It's ever since the BIS made gold a tier 1 asset, it's on par with paper currencies and the world's reserve currency, which is the U.S. dollar. And now there's more gold. Gold is worth more than all the entire Treasury market or all the dollars in circulation. I can't remember what it is. So, people, the banking system is rushing to it. And so is the private investor up until January when they all got flushed out to the downside. But, everybody knows that the current fiat currency system that we've had in place since 1971, it's going to breathe its last one of these days. And whether it be copper or gold or silver, I mean, retail investors and banking systems and hedge funds, have been piling onto the long side, accumulating stuff. And if you want to look at the poster child for that at the moment, that's Tether, which is one of these cryptocurrencies. They were the biggest buyers of gold in the last 6 months, except for the National Bank of Poland, which bought more. So, everybody can see the writing on the wall. It's just a matter of when they actually allow these prices to rise. So, the demand at the official level is absolutely monstrous, and that's not about to change.
You've also talked, and you just alluded to it a moment ago, about the days gone by when you were able to, when people say, look how disappointing gold and silver are now. Look, they're silver's half of what it was back in January just 5 months ago. Gold's lost 25-30%. These things are dogs, move on. And there's this notion, it seems, at least in the U.S., of today's momentum is all that the retail so-called investors or traders seem to care about, as opposed to the systematic, opportunistic acquisition and accumulation by the biggest parties at the top of the food chain, central banks and so on. But you said it in a way that really grabbed my attention. You said, if I could just get that one day back again, what I wouldn't give for it. And for people to look with that eye of a future perspective, looking back at today. So can you take us through that thought process and help people understand, because you've seen a lot more of this in your life than most people have.
Okay. To tell you the truth, it was Buffett. I can't remember if it was Buffett or Rothschild said you got to buy when blood is running in the streets. Well, I was a buyer yesterday. I bought Agnico Eagle Mines and added that to my portfolios. And so I'm eating my own cooking on this. But, I remember haggling with my bullion dealer over a 5-ounce silver round that I ended up, he wouldn't go lower than $35 on it. And, Lord, please give me that day back one more time. So if you're looking for a moment in history that's comparable to that, today would be the day. This is when you go in, you go in and buy when others are afraid to do it, and you sell when everybody else doesn't want to sell. I mean, the thing is that we all should have sold at the end of January, and we should all be buying today. So there's been lots of points like that through the last 25 years where, we've seen this movie before done again many times, and the price is down, it's below 200-day moving average, and you look at Bloomberg and you look at Reuters and you go to all the websites and they're saying the sky is falling and that's the end of the bull market. We've seen this movie before. We don't know what the true pre-market price of gold and silver is, but there are many magnitudes, or there are many multiples of what they are today. So, the only reason I haven't bought more today is I just haven't had the time. But I'm certainly thinking about going in the market and saying that I actually bought the low dip. So, like I said, we've seen this movie before, and if ever a good time to invest, like it's on days when it's at its absolute ugliest, and that's when it's most difficult. But that's when the real fortunes are made.
And the second half of that question was the contrast that you've been observing between the distaste that retail traders have exhibited when momentum is down or price is down versus the accumulation by those at the very top of the food chain.
Well, yeah, I mean, that's typical. I mean, I only have to look at myself, okay? I mean, I've been in this for 25 years, and I would look at the dips, and I wouldn't touch them with a 10-foot cattle prod because I was afraid to. Okay, I mean, your spirits are down, your portfolio's down, life is looking shitty. Am I ever going to be able to retire? I mean, we all live with these doubts. Okay, but over the last 3 or 4 years, last couple of years, I've been buying the dips and said, I'll tell you what, I'm going to start eating my own cooking, like I said, and listening to people like Warren Buffett and Rothschilds. These guys didn't get rich by buying at the top and buying high and selling low. They bought when blood was running in the streets. And if it made them a fortune, and then I'm prepared to, swallow hard, pony up the money and buy it. So, but it's standard for people not to want to do this. And that's why the rich are richer and the rest of us are, we just mud along.
You watch these markets as close as anyone that I know of, in a very detailed manner, analyzing the Commitment of Traders report, analyzing money flows, analyzing forward indicators, analyzing physical availability, shortages. You've talked about a major tectonic shift of control of price moving from where it currently is in New York to inevitably the East. Can you give us an insight into what you're watching there that convinces you that that's what's going to be coming?
I mean, China is the largest, is the largest population on planet Earth, along with India. They've gone from being a backward society 25 years ago. I mean, they were nothing 25 years ago, into the leading economic powerhouse they are today, and they're the biggest consumers of raw materials on planet Earth. And they've been importing gold they keep almost all their own production within the country. They've been importing gold like mad out of New York and London. They say they have, 3,000 tons or 3,500? I can't remember what they say they got. That's their official reserves, but there are a lot of people out there that believe that, including Alistair McLeod and myself, that their gold holdings are well north of 20,000 tons. And, they watch the West and financial system, its paper monetary system. They're well aware of the fact that the prices are being managed. I mean, the Chinese and the Russians have been found this out through GATA more than 20 years ago. So they're more than aware of what's going on, and they've been secretly accumulating this stuff all these years. And at some point, in the future, whenever they decide they're going to announce how many their gold reserves, and whether they go back to a gold-backed yuan, I don't know. That's really unknown. But all the power is now in the Far East, and I'm not just talking about China. I'm talking about India and all the other Korea and all these places in Japan that have that are traditional holders of gold, and the flow from gold from the west to the east has been insatiable because India and China are the number one and number two gold importers and buyers in the world on the retail level and for their banking system. So, this shift from the west, which has peaked economically, financially, and monetarily, to the west, for the west has peaked, and the east is now rising. And of course, where the money goes, sooner or later, the power to price those commodities will end up there too. And the Shanghai Gold Exchange at some point will take over from the LBMA and the COMEX, and the price will be set in Shanghai where it should be.
For people who want to follow your in-depth analysis and writing that you do, how would they find out more, and how would they take advantage of that, Ed?
Well, they just Google my name, Ed Steer, S-T-E-E-R, Ed Steer Gold and Silver. My website will pop up. There's a tab on there for, it says sample column. Just click on that, and that's the kind of information that I provide. That particular column on the sample column is my longest column of the month. It's got the commitment of traders report and the bank participation report. My daily columns, mercifully, are much shorter than the one that you're going to look at there. So, it's a fact-based column. I mean, there's not. I don't speculate. Here are the facts, and I've got all the numbers to back it up. So, if anybody's interested, they get 260 columns a year, and the freight is US $100, which isn't a lot.
Well, Ed, we know you have a very full analysis and writing schedule in your week, and yet you worked in time for this interview with us on this very high volatility day. That's been something that a lot of our viewers and subscribers and clients have been calling and asking about. Any words of wisdom that you would share with people who approach you and say, what the heck is going on with this, to help them to regain a sense of perspective at this moment, at this turning point?
Well, I'll tell you what, there's a couple of things that I'm keeping my eye on very, very carefully now. And the first one is the amount of call options that are open in December. For December gold, I have it in my inbox right here, and I'm just going to bring it up. And it's been increasing all the time. This was brought up back in February. This has been going on. The $10,000, $15,000, and $20,000 call options for gold. There's enormous there's 63,000 contracts spread up between those 3 months. And even only 2 or 3 months ago, it was only half of that. So there's money, big money, pouring into the fact that somebody's betting big that by December, gold is going to be north of $10,000, $15,000, or $20,000. We're talking about tens of millions of dollars worth invested by people that think that's going to happen. This is big money, and I expect it's smart money. And the other thing I'm watching, too, is there's a lot of talk about July the 4th and this gold-backed bond. I heard your interview with Andy yesterday, Andy Scheckman, and he was saying, well, it's Judy Shelton brought this up, but it's a possibility. It's being discussed, da-da-da-da-da. That is something, that's another straw in the wind. And here's the other straw in the wind, which I found amazing, is that if you go on the U.S. Mint's website, they've got these Liberty Bell 1 ounce and half ounce coins you can buy, and I looked at the price. A 1 ounce gold Liberty Bell coin is $19,600 US. The 1 ounce silver is $1,500, and the half ounce silver, they got a half ounce, I couldn't believe it when I saw it, is $750. Now, who in their right mind would be paying that kind of money? for a silver or gold coin. I don't care if it's a 250th anniversary of the U.S. or not. But you see the straw here and a straw there, and the call options and this big sellout. This engineered price decline, the mother of all selloffs to the downside. And the commercial traders getting out of this many short positions as they can. You take this straw and that straw, or this piece of the puzzle and that piece of the puzzle, and there's getting to be more and more of them, and they're showing up more and more frequently. I get up in the morning and look at the screen and say, how long can they keep this up before this price management scheme that's been going on for 50 plus years is finally wound down? Scott Bessent and Kevin Warsh are more than aware of the fact that what's going on in the precious metals, and I think they have plans to wind this thing down. And all the things that we're seeing up to this point, including this big engineered smash down that we're witness to, the culmination of hopefully today, is all part and parcel of hopefully a great reset in the price of the precious metals. And when that happens, it'll be a great reset in everything else as well.
Ed, thank you so much for joining us here for this update on Liberty and Finance.
My pleasure, Dunnigan.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 22nd through June 29th, 2026, while supplies last. First this week, 1-ounce gold Australian kangaroos are just $99 over spot per ounce. Pre-1933 AU $20 gold St. Gaudens coins are just $75 over melt per coin. 1-ounce silver UK Britannia are just $3.99 over spot per ounce. And finally, kilo silver Nordic Mint bars are $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.